I'm about to show you something I've never revealed before on this channel. My actual silver holdings, every ounce I own, what I paid for each purchase, and the exact transaction I made just 48 hours ago. This isn't theory anymore. This is my real money on the line, and I'm laying it all out because you deserve to see if I actually believe what I'm saying. You want proof that I'm not just talking? Fair enough. Let me show you everything. On February 8, 2026, I pulled the trigger on 100 ounces of physical silver at $82.47 per ounce. That's over $8,500 of my hard-earned money going into this market right now. Not 6 months ago, not when silver was cheap, but at prices that have most people paralyzed with fear. I'm going to walk you through the exact premiums I paid, why I chose this specific moment when everyone else is hesitating, and what my complete stack looks like today. No smoke, no mirrors, just raw transparency. But let me set the stage. Buying 100 ounces at $82 isn't something I did on impulse. This represents real sacrifice, real planning, real analysis. And I could be completely wrong. Silver could plummet to $60 next week, maybe even $50. I could be staring at a devastating 40% loss within 30 days. That's absolutely possible, and I'm not going to pretend otherwise. What I do have is a framework built on data, not emotions, and I want to show you exactly how I arrived at this decision. Here's what makes this moment fascinating. Silver is hovering around $82 to $83 right now. Just 2 weeks ago, we witnessed the most catastrophic single-day crash in 46 years, watching silver plunge from $188 down to $68.97. Then came the violent rebound to $83, a staggering 21% recovery in just 10 days. Critics will say I should have bought during that crash. Others will say I should wait for another drop. So why did I buy now? Let me be brutally honest about the crash on January 31st. I was glued to my screen like everyone else, watching silver collapse from 108 to 95, then 85, then 75, finally bottoming at $68.97. And you know what happened? I froze. I had cash specifically earmarked for exactly this scenario. I had a clear plan to buy aggressively if silver dropped below $75. But when the moment arrived, when the charts were bleeding red, when social media was screaming apocalypse, I couldn't execute. I hesitated, waiting for confirmation that the bloodbath was over. By the time I felt confident enough to act, silver had already rocketed back to $77 to $80. I missed the absolute bottom, and I'm not embarrassed to admit it, but that experience taught me something critical. Waiting for the perfect price is just another way of never buying at all. My brilliant plan meant nothing if I couldn't execute under pressure. I realized I'd rather buy at $82 after the panic subsides than wait forever for a crash that might never materialize again. So I bought at $82, not because it's the ideal price, but because the fundamental thesis hasn't changed one bit. The same reasons I was bullish at $108 are identical to my reasons at $68 and now at $82. Price fluctuations are noise. The underlying thesis is the signal. Let me show you the exact purchase. I bought 101-ounce generic silver rounds from one of America's largest and most reputable online dealers. Spot price was $82.15 per ounce. The premium over spot was $3.32 per ounce, bringing my cost to $85.47 per ounce. For 100 ounces, that's $8,547. Shipping added $9.99, so my all-in cost was $8,557, which works out to $85.57 per ounce, fully loaded. Why generic rounds instead of government coins? American silver eagles are commanding insane premiums right now, $12 to $18 over spot, meaning they'd cost me $94 to $100 per ounce. Canadian maple leafs are slightly better at $8 to $12 over spot, but generic rounds from reputable mints are just $3 to $5 over spot. The silver content is identical. 1 ounce of 0.999 fine silver is exactly that, whether it has an eagle or anything else stamped on it. Sure, eagles have better recognition, but right now with government coin premiums at historic highs, generics deliver superior value. I'm buying silver for the metal itself. When silver hits $150 or $200, my generic rounds will be worth exactly that. The premium I paid today becomes irrelevant. Now here's the bigger picture. Those 100 ounces are just my latest addition. I've been systematically accumulating since 2023, and as of February 10, 2026, I own 847 ounces total. Before anyone thinks I'm bragging, let me provide crucial context. I was fully invested when silver crashed from 108 to 68. I watched my portfolio value disintegrate from over $80,000 to under $58,000 in a single day. I didn't sell. I didn't panic. But I absolutely felt the pain. I know exactly what it's like to watch years of gains evaporate in hours. But I held through it all. And the reason I held is identical to why I just bought more. The fundamentals haven't changed. The structural supply deficit hasn't changed. China's export restrictions haven't changed. The critical mineral designation hasn't changed. Nothing that actually matters has changed. The only thing that moved was the paper price, and paper price doesn't equal real value. Let me walk you through the fundamental case that drove my decision. The supply deficit is real and expanding. In 2024, global silver demand hit 1.2 billion ounces, while mine supply delivered only 830 million ounces. That's a 370 million ounce deficit, the largest in recorded history, marking the 5th consecutive year of deficits. The cumulative shortage over 5 years totals approximately 820 million ounces. That silver came from above-ground stockpiles, COMEX inventories, LBMA vaults, and Shanghai warehouses, now at multi-year lows. The silver is being consumed by solar panels, electric vehicles, AI servers, and military applications. It's not coming back. China restricted exports on January 1, 2026, slashing the number of companies allowed to export silver from over 300 down to just 44. China refines 60 to 70% of the world's silver and just strangled global supply. Their state media labeled silver a strategic resource, the exact language they used before restricting rare earth exports. They're hoarding while the rest of the world scrambles. The United States declared silver a critical mineral on November 7, 2025, adding it to the critical minerals list for the first time in history. This classification unlocks federal investment, stockpiling authority, and price support mechanisms. Governments don't add metals to critical lists because they're abundant. Project Vault became reality on February 2, 2026, when the White House announced a $12 billion critical mineral stockpile, including silver. Google, Boeing, General Motors, GE, and Stellantis are participating. These corporate giants are stockpiling silver because they're terrified of not having enough for the infrastructure they're building. When Google stockpiles industrial metals, you should pay very close attention. The physical market completely disconnected from paper during the crash to $68.97. Physical premiums stayed elevated with Eagle selling for $95 to $165, while spot said $68. That's a 38% to 140% premium. The physical market didn't believe the paper price. Dealers weren't discounting, they were raising premiums. The crash was a paper phenomenon from leveraged futures traders getting liquidated. Physical silver was never actually cheap. The rebound proves demand is genuine. Silver surged from $68.97 to $83.43 in 10 days, a 21% recovery. If this market were dead, you wouldn't see this kind of bounce. Instead, we're seeing aggressive buying at every dip. That's not retail, that's institutional buying, sovereign buying, and industrial users locking in supply. Based on all this evidence, I concluded that buying at $82 was reasonable. Not perfect, not guaranteed, but reasonable based on available data. Now let me tell you what could go wrong. The macro environment could deteriorate. If markets crash or recession hits, silver could get caught in the selling. The industrial demand thesis could break if recession slows solar installations or drops EV sales. China could reverse export restrictions. New supply could come online faster than expected. The big banks managing silver prices could push prices to $60 or lower. I acknowledge all these risks and concluded the probability of the bullish case exceeds the bearish case. I could be wrong, but I must make decisions based on the best available information. This purchase fits into my broader strategy. Silver represents 15% of my total investment portfolio, not 50% or 80%. That's enough to benefit meaningfully if silver reaches $150 or $200, but not so much that a 50% crash would devastate me financially. I use dollar cost averaging, buying consistently at different prices. Some purchases were at 24, some at 30, some at 45, some at 65, and now at 82. My average cost is $38 to $42. This smooths volatility and removes emotional pressure from timing perfection. I maintain a dedicated crash fund for buying during crashes. I buy physical only, no SLV or futures. I never sell my core stack. I haven't sold a single ounce since I started accumulating. I'm building generational wealth, not trade. I expect silver significantly higher within 3 years, whether that's $120, $150, or $200. I expect the structural deficit to continue, industrial demand to grow, and China restrictions to persist or tighten. I expect continued volatility. We just saw a 31% crash and 21% rebound in 2 weeks. Silver will crash again and spike again. I expect premiums to stay elevated as physical silver remains tight. I expect the paper market to eventually break. The 66-to-1 ratio of paper claims to registered silver can't hold forever. Here's why I'm sharing all this. I believe in transparency. If I'm telling you what I think about silver, you deserve to know what I'm doing with my own money. Talk is cheap, actions matter. I just took action, buying 100 ounces at $82 because I believe in the thesis. I'm willing to risk my capital on that belief. Does that mean you should buy 100 ounces at $82? Not necessarily. Your situation differs from mine. You must make your own decision based on your own analysis. But I hope showing you my process gives you a framework for thinking about these decisions and confidence that you're not alone. Subscribe to this channel right now. Share this video with someone on the fence about buying silver. Drop a comment telling me about your stack. How many ounces do you hold? What's your average cost? Are you buying at these levels or waiting for a dip? I read every single comment, and I'll see you in the next one.